And back on your inflation thesis, if all roads lead to inflation, people might go a few different directions with that. Some may say, okay, well then I got to get out of cash and into assets. So maybe I'll look at the S&P, which is arguably more overvalued today than at any time in the history
Yeah.
of the
Yeah.
American Stock Exchange.
Yeah.
So maybe that's not the smartest bet. Some will go there though. Others will say, well, real estate, right? Well, okay. The average age of home buyers in the United States right now is 56 years old. So
Yep.
safe to say that's just out of reach for most people. And even new home buyers, if you get more granular, it's still like 37, right?
Yeah.
Which is way up from 21 not that long ago, right? So
Yeah.
continually further and further out of reach. So you have equities, you got real estate. Some will go to Bitcoin, right? It's a pretty volatile store of wealth. And I think you need a certain temperament and maybe a certain stage of life to really go all in as an inflation hedge on that asset class. I definitely got skin in that game, but by no means would I like put my family's safety on it.
Sure.
You know what I mean? I just like having a horse in the race. So then you look at gold, right? Which is maybe where you and I probably land. But you know, is my assessment of those four directions that people may go, do you think that's accurate? Have I missed anything, or my analysis of them, Matthew?
No, it's I talked about this 25-year-old from Columbus, Ohio, that I talked to yesterday. We were having the exact same conversation. You know, he's 25 and he has a mortgage at 7% and he has a house. That's pretty impressive because most 25-year-olds can't afford a new house. They can't get qualified for a loan. They can't buy real estate, and the interest rates are pretty painful. And it's a variable rate mortgage.
Real quick break here, guys. If you are a mining investor, you are without question familiar with the Golden Triangle region in British Columbia. This is one of the most prolific mining regions in the world due to its vast deposits of gold, silver, and copper. Now, for the last 4 years, Dolly, Varden Silver has been busy expanding their high-grade silver deposit in the Triangle, and they are backed by some of the smartest investors in the silver business, including the legendary Eric Sprott, Hecla Mining, U.S. Global Investors, Fidelity, Delbrook Capital, Sprott Resource Corp, and more. If you are curious why the smartest money in the silver business is cozying up to Dolly Varden Silver, then hit the link beneath this video.
And then we talked about, okay, you've got real estate. What about your stock portfolio? Well, he said, I'm not a gambler. I look at it and I understand that. That is speculation, is a casino. And we looked at Bitcoin. Of course, we looked at gold. So let's talk about, not just from his perspective, but you hit the main kind of allocation pathways. There's equities, of course, you know, there's risk assets, stocks and bond portfolios, you could argue. There's Bitcoin or crypto. There's real estate. There's precious metals, hard assets. And we looked at those. Again, I'm not trying to make him a client. Our minimums are freaking 500,000 or 5 million in the vaults in Switzerland. So I'm not looking for his vote, but he represents what you're talking about. These are the choices facing the younger. Because look, before we even get into that, you know, you have to understand when you talk about, are we in a recession or are things good? Well, if you're 55 and older, you have over 120 trillion of the assets in America. You're doing pretty well. That generation did really well on low rates in the biggest boom and the biggest bubbles in history. But if you're under 55, it's not the same story. They don't have that kind of market kind of share of wealth. And you didn't get a mortgage, you know, years ago when they were for free. And you didn't get them when real estate was cheaper and affordable in your 30s or 40s. This generation, my kids' generation, 27, 29, in this case 25, they're looking at a different menu. When I was that age, it was like the world was a menu. You could choose from it. Now it's a very small selection of opportunities. So in his case, he gets it. And he says, I just want to buy, I can't afford an ounce of gold. I can't afford a bar, but I can afford grams, or I can afford $100 or $200 a month. And he said, I choose that because I just want to protect the purchasing power. That's not the only thing you can do. And we talked, well, you know, if inflation's coming and the S&Ps are ripping and you're getting higher returns in equities, that can outpace inflation. And it's true. If the markets continue to go up, you've got guys like Art Laffer with a cigar in his hand saying the S&P is going to 8,000. He says it with a straight face. Could be right. I still believe in Bob Farrell and mean reversion. I still believe in the madness of crowds with Charlie McKay. I still believe in Ben Graham. But I think these markets are completely divorced from the fundamentals. No one knows what the tipping point is going to be. They're completely overvalued. It's not a gold bug argument. Jeremy Grantham, Druckenmuller, Dolly, Goodluck, we all know they're overvalued. That doesn't mean they can't continue to be inflated on cheap rates and mouse click money. But to his point and to my point, that's a personal choice. You have to make a bet that the markets only go up, that they don't mean revert. And yeah, equities can outpace inflation. They can give you, in certain bonds, certainly give a better yield than gold that gives no yield. Certainly Bitcoin doesn't either. Or you can speculate to the moon with the most amazing speculation asset of our generation, not of all time, in Bitcoin. And then we can talk about Bitcoin, which we should. But between real estate, markets, and gold, in protecting yourself from currency debasement, my bias is obvious. It's physical gold, not because gold only goes up. But look, it holds its value better than any other asset class in the world, and certainly better than Bitcoin. Bitcoin is many things, but the standard deviation over 160 and maximum drawdowns of 80%, that is not a store of value. That does not mean I'm making fun of Bitcoin. It doesn't mean Bitcoin's a joke. It just means that's not a store of value. Bitcoin has done a fantastic job, in my opinion, of hijacking the gold narrative as a store of value, as an anti-fiat alternative, as an anti-paper fiat money alternative, or money. To me, money is a medium of exchange, a unit of account, and a store of value. And Bitcoin has not been those things, is not those things, and I don't think will be those things. That doesn't mean, despite the digital picture of a gold coin with a B on it, all the efforts they've done to kind of use the same narrative that gold uses about currency debasement and corrupt governments and monetary policies and what it's done to currencies. I still don't see even people in El Salvador buying things with Bitcoin. And I still don't see central banks stacking Bitcoin. I don't see Russia and China net settling their trades in Bitcoin. I don't see the BRICS talking about a Bitcoin Enbridge account down the road. It's still gold. And I don't see the BIS, love them or hate them, making Bitcoin a tier 1 asset. So we got to be honest. To me, Bitcoin is not digital gold. It is the speculation asset of the lifetime. People call it a tulip. Guys like Voorhees say tulips don't hit all-time lows, then all-time highs, then all-time lows, and then new highs. That's not a tulip. This is just a consolidation phase, and Bitcoin is going to have its day. Again, I don't think you can just mock Bitcoin either. It's many, many things, but it's not digital gold, and it's not, to me, a store of value.